Have you ever heard about the term on-chain analysis? Let's find out a little bit about that today. Hello there everyone, I hope you're having a beautiful, beautiful day. Today we're going one step further than normal, which is we're going to do on-chain analysis. Now, we all know technical analysis by now, or if you don't know technical analysis, you can watch some of the technical analysis basics video, the day trading basics videos, which will be distributed on this channel every single Saturday. So on-chain analysis is like an addition that you can use to your technical analysis. So technical analysis can help you make decisions based on probabilities and price action, and on-chain analysis can help support that vision or maybe even reject that vision depending on what your strategy is. So on-chain analysis basically allows you to have different other metrics other than just price and use those to your advantage in order to make more informed decisions in the market. So let's have a look at one of my favorite tools for on-chain analysis, which is the funding rate. So if you know what leverage trading is, then you probably know about funding rates. So basically what happens is when you open a position, let's say you open a leveraged long, 10 times leverage, and then after you open that long with 10 times leverage, you have to increase your position size, right, by tenfold, and then the money has to come from somewhere. Well, basically you're borrowing that money, and in order to borrow that money, you are paying an interest. Well, that interest is paid to the exchange, let's say this is Binance, but also to the people that go short. So you are paying right here, and you are paying right here. So the more people want to do a leveraged long, the more money is required. Now, if the supply of money remains the same, then the funding rates will go up. So if you know that there are a lot of leverage traders in the market, basically you can see that by looking at the funding rates. Because if you have a high funding rate, which will be displayed here, then it means there are a lot of leverage traders in the market because there's a large demand for extra money and people will pay a premium to do so. So now let's have a look at one of my favorite places to look at funding rates, which is the Binance Futures funding page. So the reason why I like this page is because it allows a very, very clear and concise way of displaying the funding rates. I think other places of displaying funding rates are a little bit more tricky to understand and they don't have the same filtering possibilities. So that's why I like Binance as my go-to place for the funding rates. So as you see, I can filter on different metrics like here, and this is going from negative to positive, and this is from high to low. So what you can see is that the time to next funding in here is 7 hours and 50 minutes. So every 8 hours, the funding rate changes. So this means that this amount is paid by people going long on Cardano BUSD to the people that are shorting Cardano BUSD. So every 8 hours, 0.06% is paid out to these people making the futures trades. So this means that there are a lot of leveraged longs currently on Cardano BUSD. So that also means that if we look at those leveraged longs, then the possibility of a strong impulsive move down increases dramatically. So let's have a look at a move right here or a move right here. So these two places on the chart, they display leverage longs being liquidated. So this is not just regular people getting stopped out of their positions, but it's also leverage longs being liquidated. That's why the move is so aggressive and fast. So you know that with a lot of leverage longs in the markets, moves like this are more likely to happen. So now, if I then use that extra information, then using this information right here, I could predict that on Cardano, there are a lot of leverage longs. And it also means that those leverage longs on Cardano have the possibility to get liquidated. So if Bitcoin moves down and it takes the altcoin markets with him, then maybe Cardano BUSD is one of the places I could go looking for a short, because I now know that this is one of the most leveraged long coins in the marketplace. So that's basically one of the ways you can use the funding rates. Now, another way to look at it is by looking at it from the other side. So we now see that there are also negative funding rates. Now that means that there are a lot more short positions in the market than there are long positions in the market. So if we then make the assumption that retail traders are not usually short, but they are long, which is a good assumption to make in my opinion, then maybe these people know something that you don't know. So if you look at ARPA, if you look at Axie Infinity, if you look at BNB, then you see that they have negative funding rates. This means that there are a lot of shorts in the market, and perhaps these people have some knowledge that you don't. So sometimes you will see in a dramatic uptrend that there is still a negative funding rate. Now that means that a lot of people are going short on the asset, and it means that one, there could be a short squeeze, which is a significant move to the upside. Now, another thing that could happen is these people have the knowledge that you don't, and you're just trying to buy an uptrend that is soon going to plummet. Now, these are the two assumptions that you can make with a negative funding rate and a highly positive funding rate. Now, let's look at another on-chain metric, which is the relative unrealized profit and loss. So basically, this is the relative amount of positions that are currently in a profit. So basically, what we can see right here is that there are 1, 2, 3, 4, 5 different stages. So it goes from capitulation to hope and fear, to optimism or denial, to greed or euphoria. Okay, so basically this looks at all the positions that are relatively in a profit in the market at any given time. Now, we can see right here, right here, right here, right here, and right here, that whenever we reach euphoria, which is the top 75% of this indicator, that soon there is a correction. So it means that the market is in euphoria. People think that the sky is the limit and we're going up, 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 up only. And then usually the market just comes crashing down afterwards. So one of the things that you could do is you could look at this indicator. Now, normally it is 1 day behind if you're using this specific website. But you can look at this indicator and then use it to your advantage, that when we are reaching that euphoria stage, that you're just exiting some of your positions on the spot market, on the altcoin market, and that way you mitigate your risk and you take profits on your position. Now, taking profits on your position, I can't stress this enough, when everyone is thinking that we go to the moon, please remember to take profits on the way up, yeah? Okay, so one of the things that you can do is you can look at this indicator. You can even set some alerts if you are willing to pay for this indicator, and then you can get an alert. Maybe you can sell a little bit of your position, and then you can see that soon afterwards a crash is often likely to happen. So right now we are not even in the greed stage, and right now the funding rate is not that high. So then I could make the assumption that Bitcoin can still move further to the upside. Why? Because often we need leveraged longs in order to facilitate a strong correction to the downside. So we can see that in here, in here, in here, that the dips were bought up very, very swiftly, right? So that means that we're still in a healthy uptrend, and looking at the funding rates and the relative unrealized profit and loss compared to the same prices right here, so 63,000, and this we are at 64,000 almost right now. So we are at the same stages, but if we look at this red line right here, which is the relative unrealized profit and loss, we are nowhere near the levels that we saw in March and April. So we can then make the assumption that we are not yet in the euphoria stages or in the deep greed stages, so that maybe even though this uptrend is a little bit overextended to the upside, we can still see further upside for Bitcoin. So that's then an assumption that you can make using your on-chain metrics that you would normally not make when you are making a prediction purely on technical analysis. So now, for me, it doesn't really change my strategy because my strategy is more based on technical analysis. So what I'll still be looking for is the same setup like before. You take out the high right here on 64,850. You wait for a rejection. That's exactly what I will do. I'll wait for a rejection, maybe a support and resistance flip right here, and then I will take a short position to at least this area of demand right here at 62,000, and maybe even further towards the downside to target the 0.382 Fibonacci retracement, of which we will make a video swiftly. Okay, so that's basically the way I'm looking at the market right now. I'm looking at 64,850 and 62,000 for a potential pullback, and this is how you use on-chain analysis to your advantage. I hope you learned from this video today. I hope you will comment if you learned or what you would like to see me cover next. Now, that was it, and I will see you all in the next one.